Dominic Farrell. Hello there.
Hi Richard, how you doing?
I'm fine, thank you. Dominic, it's great for you to join with me today in this discussion on the state of the UK property marketplace. And this is being done on behalf of the Property Investor Show, which we'll both be attending in just a few weeks' time. It takes place at Excel on the 19th and 20th of April. And we've been collectively attending this show for many, many years, haven't we?
Yeah, we have, Richard. Yeah, it's absolutely fantastic. I've said this before. I'm happy to say it again. It is the number one property show for investors in the United Kingdom, without any shadow of a doubt. And again, as an exhibitor, I really, really look forward to it. It's actually one of our sort of red letter weekend. So the wife and I, we get down there, leave the kids behind, have a great weekend, meet some fantastic people like yourself and Mike, Nick, and Kelly and the team. It's great.
Yeah. Well, obviously, we're going to be joined by probably around 5,000 attendees this year. Not untypical attendance at the show, which takes place twice a year down at Excel. And obviously, it's been running now for over 22 years. And as Property Investor News, we've been attending it for 22 years. And I'll, like you, be doing seminar talks at the show. Now, as you will be well aware, Dominic, there are, amongst those 5,000 average attendees at the show, typically, there are a lot of people that are just starting out in property or starting out in property investing, people that come along to the show to find out and get up to date on what's happening, to meet the exhibitors, to talk through the potential opportunities that the marketplace is obviously offering, look at different types of exhibitors with different products. So, but a lot of people are going to be coming there for wanting to really know what's happening. And clearly in the last 10 years, a lot of stuff has come along, which reflects on the opportunities, but also the challenges in the current marketplace. And for mortgage-led buyers, obviously the impact of the Section 24 tax changes has had a considerable effect, and to some extent meant that people have had to make different choices. So people are going to come along and they're going to want to know what to do. And from your point of view, Dominic, what should be their priority? Should it be the actual location that they're looking to invest in first and foremost?
All that, Richard. I'm quite keen to start at the sort of personal level, and I've just literally written something about this, where if you are someone who doesn't sleep well at night, you worry about something, you sort of worried about crossing the road or anything, you don't really want to be in London investing in Dallas. I mean, you really do need to think about how you are as a person, what your tolerance to risk is, and what you feel comfortable with. We are finding more and more investors, though, who are predominantly in the southeast, to be fair, and overseas. They're now looking for locations where they get a return. I don't necessarily think people go, oh, I'll invest in Manchester, or I'll invest in Leeds, or London, or wherever. I think they're very discerning.
Mm-hmm.
They're looking for returns. They're mainly looking for cash flow.
Yes.
But security at the same time, and they're looking for products, i.e., houses, apartments, land, ground rent portfolios, whatever it is that provides a level of security. And I also think something like the Property Investor Show is fantastic because it showcases so many different options for people. So the first thing I do when I get there, and I'm always sort of excited, like Christmas Day for me. So we get there to set up on the Thursday night, and I just walk around and I get the buzz and everything else. I can see all the different products, and then the next day, sort of when we're all set up and they press the button and people come in, there's a sort of excitement that I've going back to childhood. It's that type of thing, and that's why people who come along to Property Investor Show can look at all the products. They can look at Dubai, they can look at Liverpool, they can look at Manchester, they can look at all sorts of different options. And I think that's really what it's about. I think it's about deciding for yourself what your tolerance to risk is, and what you feel comfortable with. And then you start looking at where the returns are.
Yes.
Now, you've got to take a number of factors into consideration these days, particularly with the announcement yesterday in Scotland.
Yes.
So from a sort of political level, you've got to look at the risk. So it's almost this sort of top-down approach to investing. So if you look at what's been announced by the Scottish National's Party, sort of Scottish National Party in Scotland, is they're now looking at a rent cap over 5 years. Now, the previous rent cap, which we know doesn't work, from the 70s, you've seen that rents in Scotland have increased more than rents in England. And I think these are factors now you have to take into account. You've got to take into account the politics. So again, if you're looking for Airbnb, a lot of people are looking for serviced accommodation. You've now got to look at politics, and the politics of a triple council tax if you're not if you haven't got business rates. I think what's going to happen with Airbnb is, we had to do a return up in the Lake District for ours recently about the number of nights it's offered, the number of nights that they've actually had paid visitors. And I think what's going to happen politically is the number of nights offered is going to have to be wider, and the number of actual paying people, hunters, tourists, whatever you want to call them, is going to have to increase. So again, these are political risks you have to consider.
Absolutely.
Investment.
Yeah. Obviously, you make very valid points around service accommodation, short lets, and the recent budget announcements from Jeremy Hunt for England, the UK, demonstrated very clearly that they're playing to the political side of all of the lobbying and all the furore that's been in the media around holiday let areas, in particular the coastal areas, and up in Scotland's very hot political potato up there around short lets and lots of licensing and planning, and it looks like similar, I mean, there's consultations out at the moment on this, announced by Jeremy Hunt, and Gove's been chipping in as well. So clearly that's a sector that for anyone now, you've got it's all very well looking at location, which is what we're talking about, and looking at where the returns are in those locations. But if it's a strategy that maybe is not going to be as robust, or it's going to be something that's potentially going to be political hurdles ahead, then your return on investment, your risk factors have to really be taken into account.
Yeah, no, absolutely. And I think also when people are looking at buying properties, particularly in the serviced accommodation world, you've got to value them as short-haul tenancy properties.
Yes.
These are paying cash. I mean, clearly a mortgage company will come in and say, well, it's not worth that. But particularly if you're paying cash for it, you've got to work out what it's worth to you with a rent per calendar month and all the costs. And you see, HMOs with these sort of large valuations. Well, the reality is, it's a house at the end of the day.
Yes.
And it's valued as a house.
Mm.
And this is another thing, really. Now we're on the theme of sort of Airbnb, because it is popular. I mean, there's no question about it.
Absolutely. People have been piling into it in droves. I mean, it had a peculiar COVID period, didn't it, with the pandemic, where in the first year, obviously, very few people with the lockdowns could get away. So anyone doing short lets in holiday lets areas obviously would have been struggle, and people doing the rent to serviced accommodation strategy, one of those little niche strategies, which they can work as long as you've got it all done correctly, the right insurance, the right mortgage product. It's a doable strategy, but of course that really was a roller coaster that over that 2 or so year period, and there was a sort of relative bust and then a big boom in 21 into 22. A lot of people did really well. Holiday lets were massively in demand in coastal areas and lovely areas, like you say, I guess up in the Lake District and some of the other national parks around the UK. But of course, then what we've seen is people come into that in increasing numbers, and maybe to some extent a little bit of saturation, and therefore the product. You then got to question, how much have I got to keep continually investing to keep up with the competition, et cetera, et cetera?
Absolutely. And I think also what lockdown has shown us is again thinking about you as an individual before you look at your strategy.
Yes.
We're winners and losers with lockdown and serviced accommodation. We were winners because it depends if you were taxed for council tax or taxed for business rates.
Yes.
You were taxed for business rates, then in our case, Cumbria County Council gave payouts against business rates. If you were taxed for council tax, you got nothing. So again, it's taking that advice right at the start. So what I always say to people is go and see a good accountant.
Yes.
And sit with your own personal situation. Because we're all different. You can't, you know, whatever works for us, it won't work for other people, and so on and so forth. So you just need to sit down. If they advise to go down the limited company route, great, get it set up properly. If they say you don't need to do the limited company route, then why bother with it? It's just hassle. And as long as you've got a good insurance product that covers all your risk if you're doing it personally, then that's fine. But I think we start by looking at ourselves, we decide what we're after. Most people are after cash flow. Given the long-term capital growth of real estate in the United Kingdom, you are going to get growth. You might not get it month, you mightn't get it next year, you might even get it for 3-4 years. And I remember, like you do, back in the 1980s, I had negative equity for 6 years.
Yes.
So, yeah. So, but eventually these things smooth out. And what I'm finding now, and I've got people of all different ages coming and asking for a bit of help, is that people are thinking about the medium to long term. Very few are coming to me saying, I want it. To be honest, they're not coming saying, I want to flip. Because it depends, in my view, it depends on the value of the real estate. So if you're in London and you've got a nice house and you're buying it for a good price and you know what you're going to sell it for, you know your costs, you'll make money flipping it. It's London. If you're in somewhere like Liverpool, then you've really got to get into a different bracket. You've got to be in the 300 to maybe 1 million bracket to actually be able to flip successfully, in my view. In the old days, you could have gone to Anfield, bought a 2 up, 2 down for maybe 25, 30k, spend 10k on it, and then sell it for 60, 70 to a investor from London. Those days have gone. There's not enough margin with the lower value properties to be able to flip them. Now, that may well come back, but presently, and again, that is about educating people about what's achievable. You know, just to say that you can sort of flip every single property you come across is nonsense. And I think really the sort of flipping strategy now is towards the medium and higher end properties.
Yeah, no, absolutely. As you know, I myself do a similar strategy I've done for decades now, of buying good yield, buying the right location, knowing your location really well, working on the numbers, and it's a long-term hold. I look at it from the point of view with the lower value areas. We could talk, you know, but should we say today lower value areas might be 120 downwards. I relate it to the cost of an added value to a bedroom and the cost of doing it relative to what you will then achieve. And with materials cost inflation, with labor inflation through the last 3 or 4 years, it's very difficult to make numbers add up. Even doing something now, even down in London, the area, on a typical greater London area, should we say, you know, 500,000 house or whatever, the cost of adding a bedroom in doing a loft conversion or an extension, if you're paying a trade and you're not able to do it yourself with that sweat equity input, if you're employing a trade and you're buying the materials and the standard sources, what it's going to cost you to do it, and then the margin that you've got left over relative to the increase in the price of the margins aren't there anymore. So I agree with you that long-term hold is what people have got to be thinking about, unless they're doing significant added value propositions, creating a 6-bedroom HMO property from a 3-bedroom house, which can be done. And obviously you've got all sorts of other factors to take into account, Article 4 licensing, etc., etc. So, Dom, thanks for your input there. I mean, let's just talk a little bit, because I've just mentioned HMOs, and a lot of people are attracted to that sector, and we'll be doing one or two more videos and run up to the show on this subject. But you talked about location. So many of the people that are attracted to you, and it's Tuna Fish Property, isn't it, the company that you work with?
Yeah.
Yeah. And you are sourcing on behalf of investors properties, which they are then buying through you, through your advisory services, your team, etc. And you're helping them to add to their existing, or helping them to start a portfolio. Is that right?
Yeah, that's right, Richard. Yeah. We specialise in sort of Merseyside, Liverpool, Wirral. We do specialise in distressed assets.
Yes.
So, as you know, I've sort of written a book. The second edition is just published yesterday, to do with property auctions. And we predominantly source the properties for clients either through auction or off market. And some of the deals are significant, and I think if you can lock in some equity right at the start,
yes,
particularly for the freehold house, then the risk factor, as long as you're well insured,
yes,
the risk factor is minimal, to be honest. So that's essentially what we do. I think I could talk about obviously auctions all day. I've written a book, but I think it's something that a lot of people don't look at because they think it's risky. I tend to think there's less risk in an auction than the risk in buying a property which is overvalued. So, I could expand on auctions later, but in general, if you're looking at HMOs, that's a great place to buy. HMOs to be converted is at auction.
yes.
The key to actually convert, I've done, again, I've written about it in the book, I've done HMO conversions, just doing one now. They're relatively straightforward. I don't think they're expensive at all. And the key is the management. I mean, the actual build is easy. It's managing the thing, which is the art.
It's a business within a box, is why the way I look at it. It's an operating business within a box, or in the case of a 6-bedroom HMO, it's 6 little businesses within that box, because each tenant is a customer for that operating business. It
is. Now, I think the HMO proposition since the war in Ukraine has changed somewhat.
Yes.
You look at the utility bills. Yeah. Go threefold, and if you're not managing the HMO correctly, and I think you're at a stage with some HMOs where you may have to visit more than once or twice a week just to ensure things are running smoothly. Because what you don't want is the shock effect of a sort of large gas bill or a large electricity bill because people aren't following the rules. But in general, you've got 6 rooms, you sort of rent them out at a good rent. You ensure that the tenants are referenced properly. What we tend to do in our lettings business is we attach a rental guarantee to these things. So almost by default that if a tenant can pass referencing to the insurance company standards, because that's what we're talking about. Because they don't give these rental guarantees to people who haven't gone through this really, really strict process. Then I think that's another way these days. I mean, in years ago we didn't have these products, but these products underwrite the risk. As long as you're on top of it and you understand the reporting elements of it, you can't sort of sit there and then 3 months later say that they're not paying the rent. As long as you're onto the terms and conditions, then I think that's a great way of underwriting some of these, property strategies.
Great, yeah. Well, it's a strategy that's going to be highlighted at this year's Property Investor Show, because there's going to be a HMO zone at the property with a number of extra exhibitors, and there's going to be obviously some seminars on the HMO market. Obviously, it can offer greater return, but as you say, it's about managing the risk. And you know, I've got personally, and I'm sure you have yourself, you'll have single let properties where you've got tenants that have been in there for many years, and others some communications with the letting agency. In my case, around, you know, I had a request yesterday about putting some shelving up, and I said absolutely, it's their home. It may be my house, but it's their home, and as far as I'm concerned, as long as they're not, you know, doing some weird stuff structurally, then you know, as long as I'm aware of it in advance, then get on. And in this case, this is a customer tenant that's been in that property for over 10 years. So yeah, that's really helpful to get your thoughts on HMOs. Obviously at the Property Investors Show, there will be lots of companies, or a number of companies, that are going to be highlighting their ability to help attendees at the show with property education. And you know, it's a marketplace that we've watched collectively for a good many years. What do people need to be thinking about in terms of when they're attending the show, or you know, looking to work and get some education around property investing? I mean, there's a myriad of choices. I'm certainly not going to mention any names, but there are companies that will be attending that have been there for a good few years. And as a result, perhaps that's a testament to the fact that they've not gone bust, or people, as in some cases, are not serving time in prison at the moment. I'm aware of one or two in that regard. But moving on from that, what do people need to be thinking about?
I'm a great believer in education. I'm bound to say that. Written a book. I do a little bit of it myself.
Yes.
The people I see who come to me who say help are people who've gone into it blindly. I mean, there's no question. They bought, and also, Richard, particularly at auction.
Yes.
They bought stuff, and I go, why did you buy that? So it is all about education. I know some of the people, you know, you're talking about the Property Investor Show. They're all good people. They're all doing a good job.
Yes.
I have some of their students who come to me as clients, and you know, the whole thing works. I think I would start by just going on Amazon. I'm not plugging my own book, but just going on Amazon. Lots of good books on Amazon.
Yes.
And then go and speak to the people at the show to see what they can offer. Yeah. You know, some of them have been around for decades. They do know what they're talking about. I recently watched someone's video to do with something online only about a week ago. Brilliant video, fantastic. So I would encourage people to go and speak to people, encourage people also to just look at the wider, as I say, political situation, because we're in that run up to a general election now, where lots of things are being spoken about. We've got a situation in Scotland. We know what's going on in Wales, particularly again with the serviced accommodation. So it's all part of this wider education. You've got to sort of take property from a top-down perspective, but you really do need to know what you do. You need to be able to crunch numbers. You know, again, if you go into freehold property, it is, to be fair, pretty straightforward. You buy a house, it's freehold. You put tenants in it, you get some insurance, you get it let out. Pretty straightforward. If you're buying other things, you need to look at the costs. So, and also particularly with Airbnb, serviced accommodation, one of the biggest mistakes people are making that I see, and people come to me for help, is they've not read the lease. Not read the lease. Now, you could have a freeholder and a management company that don't care. The insurance company cares. So if the insurance company is not aware that there are people doing weekends there and short-term lets, there is an issue. So what happens if the freeholder sells the freehold? I've done it. I've sold freeholds over the years. Yes. Even in Liverpool, I sold the freehold. Then what happens when a new freeholder comes in and they go, we're not insured for that? What happens if there's a new management company who are a bit more straight down the line, you know, so RICS type management company says we're not insured for short lets. So these are all things that you have to consider. And this is why the education is important, because on these type of trainings or workshops, certainly on ours, we go into that level of detail, and hopefully people will realize, well, you know, I've been told not to do this, or I've been advised that if I'm going to do it, I need to read the lease to make sure, get a lawyer to read the lease to make sure I can do what I'm trying to do. So, and I guess the reason I'm really into training is because I was in the army.
Yes.
And in the army, you don't go to a new job without training for it. So whatever that means, it could be running over the hills, it could be jumping out of airplanes, it could actually be going on a master's degree course, which I did as training before doing a job in the army. So yeah, I'm a big fan of it. I would encourage everyone to go around the stands, have a chat to people, and then take it forward. Yeah,
absolutely. Just recapping on what and summarizing what you just said, and anyone watching this, you know, may get the impression perhaps that you know, we're over highlighting the risk or around service accommodation short lets, but it is absolutely a strategy which has worked really well for lots of people. But we're trying to emphasize that the devil is in the detail, and there's a changing climate, and you need to think that through. And so I just want to emphasize at this point. The other thing I would say, just summarizing on behalf of people watching this video, is that what Dominic's just said around single lets, the traditional, what is now referred to as a BRR, which is to buy, refurbish, refinance and rent, is a very viable strategy in this current marketplace. Obviously, we know it's been impacted to some extent in the last 10 years by the tax changes and mortgaging properties, borrowing and leveraging up. It is more tricky now in the context of your tax implications. I think when we were talking earlier, Dominic, you mentioned that you have clients who buy only for cash, and therefore they don't need to consider talking to an accountant about the viability of putting their stock into a limited company, going down that route, an SPV, a special purpose vehicle. But for those people that are using mortgage finance to leverage and to grow their portfolio, that is absolutely something that they need to be considering, isn't it?
No, absolutely right, Richard. And again, one of the things you need to consider also, if you're buying sort of distressed assets at property auctions, that some people are under a misconception that if you say, let's use easy numbers, let's say you buy something for 100,000, and through your analysis, and this is something it's interesting, we need to, you've mentioned it already, yes. The analysis. Yeah. That through your analysis, you think that you could spend £15,000 and get a £150,000 property. That's not unrealistic at auction. But what you've got to consider that if you're using finance, generally, and this is a generalization, the bridging finance is relatively easy.
Yes.
I've got a friend who he personally does bridging finance, and his thing is, well, if it all goes wrong, we just throw it back in the auction. Yes. But they've already 30%, so I'm only looking for 70%. So the bridging finance actually is relatively straightforward. The mortgage finance is a little bit more difficult. And what's happening a lot now with mortgage companies is they are coming in and asking for further surveys. There's a lot of risk transfer. So again, this is where you are needing to look into the detail, look at the education courses, and understand what you're doing. For a novice investor to come into that sort of environment blind is open to risks. And this is again where the Property Investor Show is fantastic, because you can go around so many different people, getting advice, you know, going and getting further advice, you know, so.
Yeah, absolutely. Well, you know, let's take that typical attendee coming into the show for the very first time. If they're lucky enough to have inherited, should we say, for example, £100,000, or you know, they've sold a business, or they've received a windfall from wherever, or many people starting out in property investment, they will have maybe got to a certain stage of their life where they've now realized that they've got a lot of equity stored up in their personal home, and they decide that they want an alternative pension substitution added to, and they take out that equity from their home, and they use that to start off with as their starter point. But they've only got that literally once. They've only got that, say, it could be 50, it could be 80, it could be £100,000. This is the really key important, so it is absolutely to use the Investor Show and also the other online resources that we have nowadays that we can tap into. There's so much information out there. In fact, to some extent, that's part of the problem with the world we are in now. There's too much information, isn't there?
Yeah, there is, Richard. Yeah. Again, there's a lot of people at the show with £100,000. There is. I would say the majority of people we speak to have got £100,000 and more.
Yes.
And they are looking for security. I think since we've had double-digit inflation, people are realizing that keeping your money in the bank is high risk.
Yes, it is, absolutely. Yes, devaluing by 10% a year or whatever, even if you believe the official figures.
Absolutely. So, and again, that's one of the factors we've seen over the past 18 months is people coming into real estate simply as a hedge against inflation. Yeah. So they're buying distressed assets, which are below market value, genuinely below market value.
Right. Yeah.
Very easy to look at something at auction, do your comparables, get a software program like Property Data, or there are others in the market.
Yeah,
software that does all the hard work for you and brings in all the comparables. And then you've got your comparables, your sold data, you've got your rents, and you've got your auction. Then you can put your maximum bid in, and you know the value you're going to get. So a lot of people have done that as a hedge. And interestingly enough, I think now is probably one of the best times to invest since 2008, 2009. There's a lot of factors in our favor right now. We've gone through double-digit inflation. We're down to 3.4% last week. We've now got rumblings within, in fact, one member of the Monetary Policy Committee of the Bank of England voted to reduce rates. So the talk now is for rates to come down possibly in June. This whole noise is changing sentiment. Sentiment is obviously a very big factor in real estate. Again, I show a thing in my book. It's a sentiment indicator graph where you sort of elations up here and then despondency and what have you is down here. I think we're somewhere there now. I think we're somewhere on that curve.
Oh, absolutely. Yeah. This is in my opinion, the best time in 15, 16 years to be considering buying property, for the simple reason it is absolutely, in most parts of the country, a buyer's market. The buyer is in control. The seller has less control. That phase that we went through perhaps last year where buyers were thinking it was 2008 and sellers were thinking it was the spring of 2022, when prices were booming and sealed bids and all of that stuff that was going on. But absolutely now, the reality is clear to sellers that it is a trickier market than it was, and obviously which has consequences from a buying opportunity. Clearly, this is, and as you say, the rates outlook now looks favourable. We've had this period now for 18 months of the sudden rate shock from going from being able to get a 2% 5-year deal to now where I mean, thankfully in recent days, weeks. I saw one yesterday, I think 3.99% with a 5-year from one of the major lenders. And so that's just a sign that things are now clearly, from a lending borrowing rates perspective, looking a lot better. And as you say, the outlook for interest rates for bank rate is looking more positive. So we never say never in this business, but clearly the outlook for lower borrowing costs ahead is good, and therefore anyone that's been able to do a deal, structure a deal, and get it approved and get the mortgage financing in the last, say, 6 months, that's going to look like a fantastic deal in a year's time, very likely, because there's going to be a more profit margin within relative to the achievable rent, and rents are rising. and also less debt servicing costs because rates will be less.
No, absolutely. And again, come back to the investor coming in with £100,000. I think what they're looking for is a sort of holistic approach to it. So they're looking for assistance about where to invest. They're looking for assistance with any form of BRRR,
Yes.
including construction size. They're looking for assistance with conveyancing. They're looking for assistance with raising the bridging finance if it's mortgage, or raising the mortgage if it's just a straightforward purchase. And they're looking for assistance with the lettings and property management. And I think companies like ourselves and there are others at Property Investor Show who can provide that sort of whole life service. I think we'll see a lot of custom. The last year at the Property Investor Show was absolutely fantastic for us. In fact, I did a little piece to camera for Mike last year. The quality of the attendee is fantastic, and they're all looking. Essentially, what we're all trying to do is to secure our family's future.
Absolutely, that's what it's about. Yes,
what we're all about, isn't it? And I can't think, in all the years I've been in stock markets, I've been doing real estate and everything else. There's nothing better than real estate, buying something below market value, either doing it up or renting it out, holding it, and just letting it do its thing. It's almost, as long as you've got a management company in there who you trust and are doing a good job, you just go about your daily business. You haven't got to get involved.
No, well, I mean, like you, I mean, I'm talking to you from the southeast down here in Oxfordshire. My rental properties, most of them are up in 250 miles away from where I'm sitting today, and it is all about doing the due diligence on the companies that you're handing those properties over to, whether it be a lettings agency or whether it be a full service company that helps you to find properties. It's all about doing the research, and obviously attending your very first Property Investor Show will start you on that process, because, as you say, Dominic, there's a lot of very experienced people who are exhibiting at that show. But again, you've got to do the research and making sure that as an attendee, they fit comfortably with you, and that's down to the individual to do that research. So, Dominic, thank you on behalf of the Property Investor Show and on behalf of Property Investor News for joining me today, and obviously look forward to seeing you in a few weeks' time at Excel.
Yeah, all the best. See you in a few weeks. All the best, mate. Bye.